Hello and welcome back to the Wall Street Petting Zoo. I'm Christopher C. Smith.
And I'm Robert Coburn.
And this week, Robert, we are talking coronavirus again. Monday, the market dropped pretty hard because of how the spread of coronavirus had accelerated over the weekend. From Friday to Sunday, we more than doubled the number of confirmed cases from 2,000 to 4,400. And that had a big impact on China stocks, airlines, shipping companies, and oil companies, all of which were very hard hit on concern that travel bans might interfere with business.
Yeah, on Tuesday, the market rallied, recovered much of what it had lost the previous day. However, the spread of coronavirus continued as we added about another 1,700 cases. I think part of the reason for the rally was the Fed meeting the following day. Traders may have been betting that with markets spooked by the coronavirus, the Fed would seek to reassure them by promising favorable interest rates.
Yeah, and I also think that there was some issues with data collection this week. So I've been watching this coronavirus dashboard that tracks the number of coronavirus cases. And in the early days of the outbreak, it was pretty like real time. You could log into that coronavirus dashboard and get pretty real time numbers. But as the number of cases has increased, there's been some lag on updating of the data. So a couple times it has looked like we've had pretty significant decelerations in the number of cases that we're adding each day. You know, you'd see like only 100 cases added versus 1,000 the previous day. But then once they update the numbers, it looks like, oh no, it's actually accelerated. And probably it's because we have so many cases now that the World Health Organization isn't able to put out those numbers as fast as they're coming in. So I think that I think probably a lot of traders are watching this coronavirus dashboard, and maybe some of them are making the same mistakes that I made this week, thinking that things were decelerating and getting under control when in fact they weren't. But the actual Fed meeting on Wednesday was a bit of a nothing burger. The Fed left interest rates unchanged. It did announce that it would inject some more money into the lending markets, about $80 billion, if I recall correctly, which at least in theory is bearish for the dollar and bullish for metals like gold and also for cryptocurrency like Bitcoin, which I believe you're playing this week, Robert. However, the amount of money that they injected probably won't actually move the needle that much. It's not that big an amount in the scheme of things. So a bigger story on Wednesday was the extremely positive earnings reports from Apple and GE, both of which spiked pretty solidly after their earnings reports. And McDonald's also beat analyst expectations on earnings. Despite those good earnings, though, the market basically held steady overall on Wednesday. No really big movement on Wednesday.
Yeah, Bitcoin has definitely been a roller coaster ever since the coronavirus started. And some people attribute it to the halvening that's happening in May. But as you said, it kind of travels with gold and precious metals. So with the coronavirus fears, more people are looking for safe havens for where to put their cash.
Yeah, it does function as a safe haven, and the stock market is looking pretty roller coastery right now. So I think Bitcoin is probably a fairly safe place to put it, especially with that halvening coming up that should put upward price pressure on Bitcoin until May.
Yeah, I'm actually kind of upset about the GE news though, because I held GE for quite a while. I think I held them for like 2 or 3 years, and for a while they dipped to the point where I was like, all right, as soon as they break even from my buy-in point, I was just gonna sell it off. And I think I only registered like probably like 2% profit, and now I'm kicking myself for selling it off.
Well, you can't kick yourself too much for getting out of a company that has been failing to execute. I mean, the reality is you've got to bet on companies that are getting the job done, and GE for a long time has not been getting the job done. Lately, it's been trying to turn things around and apparently succeeding, but you had no way of knowing that they would succeed. So,
well, no, I was paying attention to like their plans. Like they had switched out their CEO. I actually think like a couple times for the time I held the stock, and they were turning it around from my perspective. It's just they weren't turning it around in a time frame that I was comfortable with.
Yeah. Yeah, I mean they've got like cash flow problems and debt problems, and they had some business units that were a major drag on things, and they've had production problems tied to the Boeing 737 Max because they're involved in the manufacture of engines for that plane. So I mean they had lots of headwinds. I don't think you can blame yourself for that one.
Yeah. So on Thursday, we got a fairly good jobless claims number, but we also got a GDP number for 2019 that was less good. In 2019, the economy grew 2.1%, which is the slowest growth rate in 3 years and well below the Trump administration's 3% projection. Both consumer spending and household disposable income grew quite a bit slower in the fourth quarter than they had in the third quarter, which suggests the economy is cooling off. Private business investment fell 6.1%, a much steeper decline than the 1% it fell in the third quarter. In fact, most of the growth in the fourth quarter came not from the private sector, but from the government. We increased defense spending by 5% this year, and we ran our first $1 trillion deficit since the 2008 recession.
Woohoo! Yeah, for America.
America.
As for the coronavirus, it continued to spread at the rate of about 1,500 new cases per day. There was also a lot of fear in the market on Thursday due to a false alarm of coronavirus on a Carnival cruise ship. They did end up clearing that cruise ship at the end of the day, but cruise lines ended the day quite a bit down on that news. I think people are realizing now that this is a real risk for travel companies, and a lot of investors probably are exiting those companies. We also had our first case of person-to-person transmission of the virus here in the United States on Thursday. And the World Health Organization declared a state of emergency, and a report said that automakers are likely to cut their China production by 15% this year. So, lots and lots of bad news linked to the coronavirus on Thursday. And amidst all of this news, it's surprising that the stock market actually gained slightly on Thursday. And partly that's because of a great earnings report from Tesla, which sent the Tesla stock soaring more than 10%. Tesla has had a great year.
Yeah. That's an understatement. That the Tesla stock has been basically just on a rampage. I think when we first talked about it in December, it was like $250 per share, and now it's what, 600 plus?
Yeah, it's way up there.
Like at some point, I felt like it started to become overvalued at like 400, and then
Yeah. Well,
now,
the thing about an overvalued stock like that is that as long as the headlines stay good, the stock is going to stay overvalued and maybe even become more overvalued, right? But like the minute that there's some bad news, that thing is going to plunge.
yeah,
So that's the risk that you always take with overvalued stuff is like, yeah, you have a lot of momentum and that momentum can be really great for you as long as it lasts. But like the minute that momentum changes, it tanks hard. So
Friday, all of that changed as stocks plunged from Thursday. The S&P 500 lost over 1.7%. That's mostly because both the US and the EU banned travel to China and to other countries affected by the coronavirus, including Taiwan. This could have a very negative effect on earnings in the first quarter of 2020, especially for travel, shipping, and oil stocks. One good piece of news Friday was that the consumer confidence in January beat expectations, coming in at 99.8 rather than 99.1.
yeah, normally that would be a great headline, but unfortunately, I think given all the other news out there right now, consumer confidence is not at the top of people's list of headlines to worry about. So I don't know that that's going to move the needle at all. Uh, in addition to some bad economic data, we have the number of new coronaviruses still steadily increasing this weekend. I expect next week to be a very red week. We've got travel bans announced Friday. Not only within China but internationally. We've got Donald Trump announced that not only China is off limits for travel, but several other countries, including Taiwan, which is a major exporter to the U.S. So we're going to see probably serious slowing of international trade and the international economy due to this coronavirus thing. There are now at least 8 countries with double-digit numbers of coronavirus cases. That may have increased since the last time that I looked. And let's see, we're at 14,628 confirmed cases right now. And in the last data point, we added over 3,000 cases. So that's a significant acceleration just in the last 24 hours or so in terms of the number of coronavirus cases that we're adding. So coronavirus is not looking like it's going to get under control right now. It's looking like, if anything, it's going to probably worsen in the coming week. And then also we've got some economic data. So FactSet released a report the other day that said that the number of companies beating expectations on their earnings reports, both in earnings and sales, are below the 5-year average. So it's a very weak earnings season so far. So it looks like companies are not meeting expectations as they usually would. So that's just another bellwether going into February that things are going to worsen in the stock market. And also, early February is a weak time in the stock market anyway, because companies that report earnings later in the season tend to have worse results than companies that report early in the season for various reasons. So I think probably early February is going to be a really bad time to be in stocks. So I would say probably keep most of your money in cash or in metals or in Bitcoin or something like that. Find some safe havens, because it's going to be a roller coaster ride in early February, and I think probably it's going to be quite a bit more red than green. That's my guess.
Or just buy Tesla.
Sure, you could do that. Although, Tesla has a lot of exposure to that China market. And as I said, it's being estimated that automakers are going to cut production for China by about 15%. So maybe don't buy Tesla. It may be that Tesla's headlines start to change right along with everybody else's, and they get hit by this coronavirus thing.
Yeah. I'm not sure if Elon Musk would go with the rest of the quote-unquote automaker industry, though. He tends to go against the grain.
That is true. And Tesla has, pre-orders like a year or 2 years out. So their production may not be impacted by this because they've already got to meet the orders they already have.
Yeah. So what stocks were you watching this week?
Well, as I mentioned last week, I was mostly out of the market, but I did call out a few that I thought might be worth watching. 3 of them were pharmaceutical companies that are working on vaccines for coronavirus. If you recall, I didn't play these because I thought they were all overvalued already, but I thought there was a possibility that they might all run on news of the vaccine development. And they did open the week quite a bit higher on that news of vaccine development. But from there, they fell over the course of the week, not really dramatically, but they ended the week, down significantly from where they had started. So kind of glad that I didn't play those, honestly. And then I also mentioned in our last episode that I would be watching for an entry into the China fund, MCHI, around $59 a share. We never did quite hit $59 a share. This week, we probably will hit 59. I'm looking at maybe entering around 59.50, but now that I see how much coronavirus is accelerating, I'm rethinking that. I'll probably wait for a much lower entry. 56 is maybe a more realistic place to enter. So I'll be watching that and watching the coronavirus news and making a decision on whether I might enter around 56.
That sounds like a good price point, 56.
It's based on trend lines. So I've got some trend lines that I've drawn on the China ETF, and we've dropped to a first, steeper trend line, and we're headed toward possibly a lower trend line. So those are the levels that I watch. As when it gets close to those trend lines, that's usually a pretty good time to buy.
Make sure to follow Chris on TradingView for these trend lines.
Yeah, that's right. I do analysis. You can see my stock charts on TradingView, and got quite a few followers on there.
So the stocks I was watching this week. So as expected, I didn't anticipate Netflix to take a hit with the coronavirus scaring investors away from the market. If the stock continues to slowly climb with the rest of the market going the opposite direction, it may be interesting to see what the subscriber numbers are come April when they announce their next earnings report. They actually just reported about 2 weeks ago. So it'll be a little bit before we get some news on Netflix, and maybe the coronavirus will be subsided by then. But it'll be interesting to watch the stock, because the stock didn't really dip or go. It didn't really go anywhere this week during all the news of the coronavirus. So the good thing is it's not going down. It's basically staying the same. And Disney, on the other hand, may take a hit on their park attendance around the globe with people staying home. But Disney Plus actually may make up for that attendance. The stock hasn't taken that big of a hit, but it has been slowly declining since they leaked their subscriber count a week after the Disney Plus release. But some analysts are expecting Disney to announce that they have 25 million subscribers during their earnings call, which is scheduled for Tuesday after the close. So if they do report around that 25 million subscriber mark, I do anticipate their stock to go up no matter how bad the market is going. That's only because if people see that they have a strong subscriber pool, they know that if they were to put their money there, it would be a safe bet. So definitely Disney is probably a one to watch this week.
Yeah, and I've got some friends in China right now, and they are reporting that everybody's staying home, and one of the most universal feelings in China right now is that everybody is bored out of their minds because they can't leave their house. So I think that it's probably a good time to get into those streaming stocks, because I suspect that the China market for streaming services is going to be pretty big as long as this coronavirus thing sticks around.
Yeah.
Stocks that I will be watching this week. I re-entered Baidu on Friday because it looked like it was finding some technical support. And then I added to my position after hours because Baidu issued a press release after hours indicating that they expect their earnings and revenue to be at the high end of their previous guidance. They had been expecting anywhere between -1% to 6% year over year revenue growth. They now say it's going to be in the range of 4 to 6% revenue growth year over year. So good, strong revenue growth at the high end of their guidance. And their income growth year over year is going to be between 83 and 90%. So they're nearly doubling their adjusted income this year. They've got close to 100% income growth this year. That's pretty incredible growth for Baidu. And it suggests that the stock, which is trading, really low near its 52-week lows, is a bargain at current prices despite the coronavirus. So definitely re-entered Baidu and looking for potentially a Baidu boom next week. I'm also watching Immune Therapeutics, which got FDA approval after hours Friday for the world's first preventative drug for peanut allergy. I think the market for this drug could be pretty big, although it's hard to say. The stock jumped 20% after hours, and it may continue its run on Monday. I bought some just after the press release on Friday, and I gained about 10% after hours. I'll probably sell Monday morning, though, because the stock was already pretty overvalued before the news was released. It already looked pretty high, so I don't know how much higher it actually has to go. I think people were anticipating that this drug would get approved, and so a lot of people had already bought in before the announcement of the FDA approval. I'm also not sure how well timed this is, given that Mr. Peanut is going to die today on the Super Bowl commercial. Does the world need a peanut allergy preventative drug if Mr. Peanut is dead? I don't know. I also saw Disney announce today that Goofy has died. I think they're trying to get on the Mr. Peanut bandwagon. But keep an eye out for the Super Bowl commercials. They should be pretty fun. Another one that I am watching is Grupo Financiero Galicia, which is an Argentinian bank. And it's trading at extreme bargain prices right now because Argentina experienced runaway inflation this year. And they raised their interest rates to like 80% or something crazy like that. However, they've now got their inflation under control, and they've been steadily bringing interest rates back to more normal levels. They were at 50%. I think Thursday or Friday they reduced that another 2% to 48%. And those interest rates are gradually coming back down to more normal levels, which should increase demand for lending. And as the country recovers, analysts have been increasing their ratings on this bank, Grupo Financiero Galicia, which is the ticker is GGAL. GGAL now has a 10 out of 10 analyst summary score, meaning that pretty much all of the major analysts are now bullish on the stock. And the only risk here really is that this stock could get a major downturn if Argentina gets its first coronavirus case, or if there's some kind of like major default by the Argentinian government. Finally, I am looking for a bounce on AbbVie next week. This stock is down because the company had to sell off some patents in order to get antitrust approval for its merger with Allergan, which is another pharmaceutical company. But the patent sale puts a bunch of cash in AbbVie's pocket that they can spend on developing new drugs. And the merger should be good for both Allergan and AbbVie, should increase their scale, increase their efficiency for production, improve their margins. And they also have some potential for a news bump because their HIV drug is being used off-label to treat coronavirus patients. So probably the more that coronavirus expands, the more likelihood that AbbVie will get a news bump from being used off-label to treat coronavirus. The stock has a great valuation and a great dividend at nearly 6%. I think the PE is something like 10 and the dividend is 6%. And Allergan also has a good valuation at close to 10 PE. Although their dividend is lower at like 1.5%. So I like playing it from the AbbVie side because they have such a high dividend at a really great valuation. And I'm looking for support for a bounce in AbbVie somewhere in the 77 to 82 range. I think it closed somewhere about 81.50. So it's in that range already. And we'll see what it does in the way of bouncing next week.
Oh, I love me some dividends.
Well, you should look at that one. It's a really solid stock.
Yeah. Hopefully they don't have a mascot that tries to kill themselves like Mr. Peanut.
Uh-huh.
I thought he was already dead. Like they announced that he was already dead, or are they having him kill himself off in the actual like Super Bowl commercial?
Yeah, he's gonna die saving people's lives during the Super Bowl commercial, and they announced in a sort of pre-publicity press release to stir up excitement about his noble act of sacrifice.
So he's supposed to save like Wesley Snipes, and I forget who the other guy is.
Yeah. I'm not sure what's going on with the Goofy thing. I think Disney is just jumping on that bandwagon.
Probably. I'm surprised Wendy's hasn't done that. Wendy's likes to do viral things, so.
Yeah.
So as for the stocks I'll be watching this week, WWE, they took a huge hit this past week with the abrupt announcement of two executives being asked to resign over an expected poor quarterly earnings report set to be released this coming week. It lost nearly 25% value just on Friday. And this stock, which was once eclipsing the century mark as recently as April of last year, it's now down to $48 per share. So it's lost over half its value in the span of about 8 months. I think that the stock should rebound a little bit going into the start of next week, which is why I did buy in on Friday. However, this is not one I'm looking to hold long term. I'm going to be looking for the exit when it rebounds. Viacom CBS, formerly Viacom, as of December 2019, so they actually just rebranded to Viacom CBS, is announcing their earnings report on the 20th of February. But I'm going to be watching the stock as it's starting to look pretty attractive at its current price point. It's actually fairly low, and they actually have the highest market share of watched hours just for the fact that they mostly provide free content. So it's very attractive to ad companies that are looking for ad space to get more customers. So I think it's a good time to buy in because basically it's a little over $30. It's like $33 per share. So much more attractive buy-in than if you're looking at like Netflix or Disney. But definitely a stock to watch this week.
And given how little streaming content they actually have, I think that they've done pretty well at monetizing their streaming service, just with catering to Star Trek fans.
Oh yeah. And then Ford, I've been watching for a long time now. I've been calling it my dark horse stock for the longest time. I've been holding on to their stock for close to over a year now, as I was betting they could turn things around, just like with GE, and withstand the onslaught of imports that have been coming from like Japan and Korea. They've been struggling in China, and I don't anticipate the current situation is going to help, as you mentioned earlier, that most automakers will be cutting production by at least 25%. However, they have beat estimates in the 3 of the last 4 quarters, but there's mixed expectations that they will beat estimates this quarter. So, I mean, the Ford stock is fairly cheap. It's like $9 per share, or like $9.50 per share. So, it's good if you want to see if you're a betting person like I am and want to try and see if it'll bump up to past the double-digit mark. And last but not least, Activision Blizzard, they are expected to report earnings this Thursday after the close. They've been slowly climbing out of the hole they made over a year ago while dealing with the public outcry over layoffs and handling of the Hong Kong protests. Where a lot of companies focus on subscriber counts or EBITDA when reporting earnings reports, gaming companies focus more on MAU, which stands for monthly active users, which Activision Blizzard has been seeing a constant decline over the last 3 years. So it'll be interesting to see what numbers are given out this quarter. But they also are on the forefront of esports, which is supposed to be like one of the next big industries to come out. Esports is expected to, I believe it's $2 billion is the market share for that, projected for 2020. So those are the stocks I'll be watching this week. I probably won't be buying any stock this week, but I'll just be watching, especially with the WWE stock. I plan on looking, like I said, I'm planning on looking at for the exit very soon.
Yeah, I think it's probably a good time to be in entertainment stocks. I mean, entertainment and leisure were already a really hot sector. They've been adding a lot of jobs in that segment of the market this year. And now any entertainment that you can stay home and watch is probably going to have a pretty good few months as a result of this coronavirus thing. People sitting at home feeling bored. So maybe not a bad time to be looking at those stocks.
Yeah.
All right, Robert. Well, I think that went pretty well. We've got coronavirus news. We've got economic data that doesn't look good. So lots of reasons to stay out of the market right now. I'd say trade with caution. Any last words you want to say before we close out here?
Yeah, definitely hold on to your cash or look at, like I said, safe havens like cryptocurrency or gold. Those are definitely going to be places where as the market goes down, they'll inversely go the opposite direction. So just pay attention to the market news before investing. Don't go all in unless you're you're a gambler. So be smart.
All right, folks, if you heard anything on the podcast today that was useful to you or that you appreciated, go ahead and give us a like or a share on YouTube. You can also follow us on Facebook or Twitter. We'll have links to that underneath the YouTube video. You can follow us on Podbean and iTunes, and we will see you at the zoo next week.
See you.